getting the sense, we've got a full panel for you today, which is brilliant. And I think this will be I was saying it's really interesting. I think when we have a webinar that's got the word tax in the title, it can put people off. But for me, it's really fascinating, actually, because I just think if we get this stuff right, this is such a lever, actually, for what we're all here to do as social enterprises. For me, is kind of address key issues in our community. And actually how tax is spent is a really important part of that. And I guess the only bit I just said to our panelists I was going to do as an introduction, and I think this is why tax and social enterprise is just such a fascinating topic, is because as organisations that are trading and running businesses, we obviously want to be efficient and maximise kind of how we run our businesses. But I think it's really interesting for those that follow some of the social media stuff around, I'm not saying I follow social media around tax. Sorry to the Fair Tax Foundation, you probably do, but maybe I should start. But actually, I've really loved seeing the posts recently that have come out from Elvis and Cress, who are a quite well-known social enterprise. And they're putting out lots of posts about being proud to be paying their tax bill. And I think that's really interesting. And they're proud because of what tax money can be spent on and the difference it can make. And that's all I was going to just say by way of introduction. And I'm just going to introduce our speakers today. So delighted to bring you this webinar. It's Fair Tax Week. I'm sure we'll be hearing a bit more of that from our presenters, so I'm not going to say much more on that. So just to introduce our speakers for today, and then we'll get going. So first of all, I'm delighted to welcome both Graham and Jamie from the Fair Tax Foundation, and they're going to kick off our webinar for us today, before we hand over to Chris from the Charity Tax Group, and then last but not least from Mel from Big Society Capital. And I already know she's got things lined up to share in the chat with you with useful resources, so you definitely want to stay through to the end. And as ever, use the chat, ask questions. We've got, a great panel here today. We always try to say, even if we can't answer questions directly today, we do try and get back to people. And one of the common questions we always get asked is, will the slides be available? And I will share them after the webinar today. So thank you everyone for joining us, speakers and attendees. And without holding you back any further, delighted to hand you over to Graham and Jamie. Thank you.
Thanks, Naomi. Cheers for having us. It's really good to be here. I'm just going to share my screen. Okay, so hi everyone, thanks for coming. And I'm Graham Drummond. I'm the Head of Communications at the Fair Tax Foundation. I'll be kicking off our presentation today and just handing over to my colleague, Jaime Boswell, a bit later, who is the Head of Accreditations, to guide you through the rest. So a little bit about the Fair Tax Foundation first. We launched in February 2014 as a Fair Tax Mark. You might have noticed that we changed our name a couple of months ago. This was to distinguish the organisation from the mark that we award. So we promote and encourage responsible tax conduct. We believe that tax conduct is fair when a business pays the right amount of tax in the right place at the right time. And this means that if a profit is made in the UK, then it should be taxed there too. At the time it was earned and not shifted to another country to be taxed there at a lower rate. It's about acting in accordance with both the spirit and the letter of the law. There'll be obviously many legitimate instances when a business does not pay corporation tax at the headline rate, such as when they post losses or utilise tax reliefs in conjunction with topping up staff pension pots or capital investments, for example. So over 60 organisations are currently certified. They include FTSE-listed PLCs, cooperatives, large private businesses, and of course, social enterprises. This week, we actually announced another social enterprise, Chelmsford Star Cooperative. And at the end of this year, we will be expanding internationally to allow businesses outside of the UK to attain the Fair Tax Mark for the very first time. So a really exciting time for us. Something really important to us organisationally is the focus on celebrating responsible business. Unfortunately, every now and then we have to bring to light stories around tax avoidance by big companies. And you might have seen us as well, actually talking last week on BBC News and ITV News about the G7 tax deal and how it hopefully needs to capture Amazon as well as the other tech giants. But the Fair Tax Mark is a mechanism for celebration. It's an accreditation to be proud of, and it exists so that we and the holders can show the brilliant thing they're doing by paying the right amount of tax with pride. As an organisation, we seek to be really positive about those paying their fair share and the amazing things that does that Naomi touched upon briefly. So helping to fund vital public goods and services like education, health, social care, all the way through to things like flood defence, roads and policing. This week is Fair Tax Week, and with the hashtag Celebrating Fair, we're highlighting loads of great stuff that corporation tax helps fund and those organisations and businesses that are paying it for the benefit of all. So here are our accredited organisations. They include social enterprises that you might recognise on there, like Unlimited Potential, Community Leisure, Leeds Building Society, Unity Trust Bank, actually re-accredited with us today for the 8th year in a row, which is brilliant. You might have also heard actually of Gerber, the Scottish camper van business. They're actually speaking this morning at a Scottish parliamentary event with our CEO, Paul. So as well as organisations, we also have 12 councils who've signed our Councils for Fair Tax Declaration, committing themselves to leading by example on their own tax conduct and demanding greater transparency from suppliers. There are some councils now preferring to use suppliers with the fair tax mark. And you might have actually seen on Monday that Birmingham City Council, the largest council in Europe with a budget in excess of £3 billion, became the 13th to join our Councils for Fair Tax. So tax matters. As I mentioned, it helps to fund vital public goods and services. It levels the playing field, and that's as important for social enterprises as anyone. How can a social enterprise compete against a company the size of Amazon if they have armies of lawyers and advisors looking for loopholes? That's what we're trying to encourage and achieve in this organisation, a level playing field. The public care about it too. So last week we unveiled new UK public polling data that shows people care about tax issues and really want to see businesses being transparent and being fair. This is just one stat from those findings, and it shows that 2/3 of the public would rather shop with a business or work for a business which can prove it's paying its fair share of tax. And one more, 72% of people think it's important to celebrate businesses who can demonstrate that they pay the right amount of tax and who overtly shun the artificial use of tax havens and contrived avoidance practices. So as you can see, tax is something that the majority of the public really care about. It's not just businesses. It affects the way that people see business too, and sometimes ultimately whether or not they choose to use that business or its services. And I'm just going to hand over now to my colleague, Jaime Boswell. He's the head of accreditations here at the Fair Tax Foundation. And he's just going to talk a little bit more about how fair tax is relevant to social enterprises.
Thank you, Graham. So tax is a contribution to society which applies to all social enterprises. Why does the Fair Tax Mark accreditation go so well with social enterprises? Because social enterprises exist to deliver specific social and/or environmental goals. In other words, they have our society and the environment at the heart of their operations. Whilst the social enterprise will have specific social and/or environmental goals, tax is a way for all social enterprises to contribute to our society and its needs on a more general level. We at the Fair Tax Foundation therefore believe that tax should be fair, reported on honestly and transparently, and should in fact be celebrated as a contribution to the society from which the organisation has received its income from. As you've seen from our data, people can form opinions about an organisation based on its tax conduct. The Fair Tax Mark certification goes hand in hand with the ethos behind social enterprises because it's about doing what's right. And becoming Fair Tax Mark certified shows the public that you are being a good corporate citizen by being fair, honest and transparent with your taxes. Tax should be seen as a positive. To be subject to tax means there are profits being made, and therefore the enterprise is succeeding in its mission, whilst also giving back to society through its taxes. Therefore, tax can be one metric of your contributions to meeting society's needs and changing the world for the better. And by reporting this in a way that's open, honest and transparent, it enhances the public's understanding of your positive contribution to society. The process for gaining the Fair Tax Mark certification is very straightforward, and our fees are based on the organisation's size and complexity. We would assess your most recent sets of accounts and your public communications against our Fair Tax Mark criteria, which are all available to download on our website. We would then provide you with a confidential report which highlights how your organisation is currently performing against this criteria with any suggested areas of improvement. Once the necessary thresholds have been achieved, the organisation would then be classed as Fair Tax Mark certified. The accreditation is an annual process, and so when the next year's set of accounts are ready, the assessment process would start again to ensure that the necessary thresholds are still being met. Thank you for listening to us today, and if you have any questions about the Fair Tax Foundation or its certification, then we're happy to answer these in the Q&A at the end.
Thank you very much. That was great. I was interested. I guess it was great to see Edinburgh as a local authority listed up there. You're always looking for the ones, so thank you for pointing those out. And for those of you who probably haven't picked up on my slight Brummy accent, I was also quite pleased to see Birmingham. Thank you, that was really helpful, and I think we'll touch on some of the questions, and I've already got a few I've noted down myself, and I'm going to check one of them with you that it's not perhaps too controversial to ask. So if you're ready for controversial questions, they're potentially on their way. I'm delighted now to bring Chris Lane into the conversation. Chris, I'm just going to hand straight over to you. I know you've, I think, got a few slides to share with us as well. Brilliant. They're all showing. Thank you very much.
Thank you, Naomi, and good morning, everybody. Oh, I've got the wrong date on my slide, which is a good start. But this shows that this is something we talk about fairly often, although adapted to different audiences. So I'm Chris Lane from the Secretariat at the Charity Tax Group, and obviously been asked to talk to you today about how you can drive your social impact through taxation. Now, the Charity Tax Group is a representative body for charities. We do have a number of social enterprises that subscribe to the work that we're doing, but it was set up principally for charities, and that's the sort of main focus of what we do. But I think there are some interesting lessons that can be learned, and there's obviously some crossover with things like SITR, which Melanie is going to touch on later. And even for those of you that are not charities, you may well be supporting charities, or part of your future plans may be to work closely with charities. So hopefully it's useful for you to understand the tax system that they work within. There's some information up here on the screen, which I won't go through in great detail, and also got some links to some resources at the end. So what I thought might be quite interesting is just touching on the point in the last presentation about contribution of tax from charities, because there is a sort of general perception that charities don't pay tax, and that couldn't be further from the truth. I mean, charities do benefit from a lot of tax reliefs. And this is a graphic from some research that we did last year, and VAT reliefs and business rates reliefs, and also gift aid, which we'll touch on in a minute, all make a very welcome contribution to the work that charities are doing. But charities are also actually a net contributor to the exchequer in terms of the number of people that they employ, the VAT that they still end up paying, and particularly employment costs. So I think that's important that we recognise that. Now, one of them, obviously, the main distinctions between social enterprises and charities on a very crude level is the sort of profit element. For charities, it tends to be funded by sort of grants and legacies and donations, and any trading income does tend to be sort of separated off into a trading subsidiary unless it's at a lower level. But what that then enables the subsidiary to do is to reinvest that money back into the charity. And one of the things we look at with the Charity Tax Group is what is the appropriate level of tax that charities should be paying. And I think there's a strong argument that as a responsible employer, some of those employment taxes certainly should be paid. But things like VAT, where charities are worse off than a commercial operator or a local authority or central government operator, that perhaps is seen as a distortion, particularly when people are giving money freely to charities, and want to make sure that their donation goes as far as possible. So This is something that is available to charities and casts only, and I'm sure a lot of you will have been aware of this. This is gift aid, so this is a way of maximising your donation when you give money to charity if you're a UK taxpayer, and it's effectively founded on the principle that if you've paid tax on income you've earned, you shouldn't then be taxed again. You shouldn't be taxed on income you've given away, effectively. So that's the way that operates, and we've certainly seen a huge increase in the use of intermediaries like Just Giving and others in that field, which really makes it a lot easier for smaller charities to do their fundraising. And there's also another scheme called the Gift Aid Small Donations Scheme. I'm going to rattle through these slides quite quickly, but you all have the details afterwards, and if anybody wants to pick up anything in the questions, we can certainly do that. Now, one of the things that the Charity Tax Group has been doing alongside lots of the other representative bodies in the last year and a half or so has really been trying to support our sector when it comes to the pandemic, which has obviously had a huge financial impact. And I just wanted to touch on a couple of the schemes. Most of you will be aware of these, but it's important that you're still aware of what's available. So the Job Retention Scheme, or the furlough scheme, that started sort of last April, I think it was, March or April, and has continued to be extended. And it's due to close on the 30th of September, although there's a reduction in the amount of the contribution from the government in July. So those of you that are still furloughing staff should keep an eye on that. But there has been some rumours recently that may well be extended again. So again, that's something to keep an eye out for. What we have seen is that HMRC is now starting to look at furlough claims and to make sure that they've been processed correctly. Now, in most cases, I'm sure that any organisations that have made a furlough claim have been doing it in good faith, but it's just important to make sure that you've got things right and you've got the right documentation if the government and HMRC come to look at it. Now, throughout the last year or so, governments from across the UK have been giving out various grants, and some of those are now closed, particularly as we're hopefully now coming towards the end of the pandemic and things are starting to open up. But I flagged a couple of Scottish Government grants. Some of you will be aware of these. There's the Business Restart Grant, and that's particularly for sort of leisure and hospitality sectors. But there is also discretionary business funds available as well. So do make sure that you've checked with your local authority. The local authority websites and the Scottish Government website are quite useful at pointing in that direction. For those of you that it will be relevant to, there is the fifth part of the self-employment income support scheme. And there have also been loans that have been available. Now, for many charities, that's been sort of less effective because they don't always have the means to generate the money to pay that back. But certainly for social enterprises, if it means it can get you through a period, that may well be something you've already considered or would consider going forward. Now, business rates, again, this is something where charities do have a particular benefit in terms of 80% mandatory relief if the building is used for charity purposes, and that can be extended up to 100% with discretionary reliefs, and that's worth up to £233 million in Scotland across the sector, so it is very important. The government has announced a sort of general rates holiday for retail, hospitality and leisure businesses, which has been extended for a further year. It's actually slightly more generous than they've announced in England. But there are also discretionary business rates reliefs that are available that don't require you to be a charity. So if you're involved in enterprise or small business. So again, the local authority websites are a very good place to start. One of the things that has come up recently is Oscar has been looking at the charity regulator in Scotland has been looking at the charity test in Scotland, because there have been a number of issues relating to a case called New Lanark, which involved trading subsidiaries, and whether they should be eligible for business rates relief or not. So that's definitely going to be an area to keep an eye on in terms of definitions. And we've also seen, following the Barclay review, that the Scottish Government have narrowed the eligibility of business rates relief to exclude independent schools, for example. And that's not something that the Charity Tax Group takes a view as to whether different types of charities are more meritorious than others. But what we always think is that if something is a charity, it should be eligible for these reliefs, because otherwise it could be, it could be the thin end of a wedge. And then could it be charity shops? Could it be international aid charities, or whatever the government of the day decided that they were less keen on? So I mentioned VAT earlier. Now for charities, this is something that, as I mentioned earlier, we are concerned about. We do recognise that charities pay tax, and that's an important part of what they do. But what charities face is irrecoverable or sticking VAT. So they're in the same position as you or I. And the classic example is if we go into the shop and we buy a Mars bar, for example, or something healthier, we have to pay the VAT on that element, and we as individual consumers aren't able to recover that. Now, in the sort of business or public sector context, they are ordinarily able to recover all or part of that VAT, whereas charities in many cases are not able to. So where charities are not charging for their services, they're definitely worse off as a result, and that's something that we've had a long-standing campaign to try and address. Those of you that are registered for VAT, and this isn't just charities, this is across the board, will be aware of Making Tax Digital, which is a digital reporting requirement. And there are also new requirements now that require you to have what they call digital links at the back end of your VAT systems. The registration threshold for VATs, I think it's £85,000 of taxable income at the moment, but there's been a big push for that to be reduced, and it certainly hasn't increased with inflation over the years. So particularly for smaller organisations, they should keep a close eye on that, because that could be reduced in future, which could bring you into that Making Tax Digital net. There's obviously some benefits to businesses in being VAT registered if they can recover some more of their VAT, but there are administrative complications too. One of the things that the government allowed organisations to do last year was to defer any VAT between March and June 2020. Those organisations that made use of that, they do have to make sure they've paid that back by the end of June or opted into a staggered repayment scheme, but they need to have taken some action by the end of June this year. And just a couple of other things to consider which are relevant to charities, and perhaps more broadly, particularly those where sort of corporation tax comes into play. Charities as a general rule are not subject to that unless through their trading subsidiaries. Melanie's going to talk about SITR a bit later, and that's certainly something to be aware of, as well as some of the other investment reliefs. There are special reliefs for the creative industries. So if you're involved with orchestras or theatres or museums and galleries, there are various reliefs that are available. I mentioned Making Tax Digital for VAT earlier. The intention is to extend that to corporation tax and income tax. So it's again just something to be aware of on the horizon that you'll need to comply with. Often it won't be too complex once you get involved, but there may well be some software purchases and some training of staff and volunteers too. And the final point is also research and development tax reliefs. Now actually for charities and universities, they're no longer able to make claims under those reliefs, but for other businesses, it tends to be larger businesses, but you might be able to marry up with large organisations too, can gain tax reliefs, corporation tax reliefs on any research and development work subject to various criteria. So just a couple of resources at the end, and I know that Naomi will circulate these afterwards. We've got lots of information on our website, and we're fairly active on social media too. We have a monthly newsletter, which is fairly high level what you need to know about tax. And we also then have a weekly newsletter, which is a bit more detailed. So those of you that are charities or advisors may be interested in that. We also have a COVID hub, which was certainly it was busier last year. We still do update that fairly regularly. We also have training sessions. We've had 6 or 7 this year already. Had one on Brexit, one on business rates, a couple on gift aid and VAT. And I've also included a couple of the guidance notes from HMRC there as well. These are obviously specific to charities. So that's a very whistle-stop tour through charity and tax. But if you've got any questions at the end, we're happy to answer them.
Thank you very much, Chris. I certainly know, having taken a registered charity through things like VAT registration for the first time, it's a complex area, I think, that for our sector. So it's always helpful to have that overview, I think, in terms of just what organisations have to consider. And I was really interested in some of the points you had there about the statistics in terms of, like you say, the assumptions that everyone's just doesn't think of charities actually being a taxpayer. They think of them more being a receiver of tax. So I thought some of the numbers and stats on that were really interesting. And I have to say, I was also thinking, as you were talking about the irrecoverable VAT, it's something that SES pays. I'm not here with my accounts, or our accounts, so we can't do I can't tell you the details, but it is a big issue, I think, and we see that certainly directly as well, and know our organisations and members do as well. So thank you for that great overview. I've already got lots of questions. I'm really pleased that you started to do the introduction, I guess, into things like social investment tax relief, which we know a number of social enterprises have utilised, and I know Mel's going to touch on now in her presentation a little bit. And I think, you know, we were at a danger, I think, earlier in the year of potentially losing that, and there was a big campaign to keep social investment tax relief going, which I'm really pleased that certainly for now that's been saved, I guess, for our enterprises out there. But I guess, Mel, you'll touch a bit more on all of that, and I'll hand over to you directly now. So thank you very much, Chris. Over to you, Mel.
Thank you, Chris. Thank you, Naomi. Yeah, I'm going to round off this session about tax. So I'm going to do the complete opposite, which is saying that I don't know how I managed to know this much about tax. I think in my very early days at Big Society Capital, somebody said we need somebody to go to a meeting about social investment tax relief, and I was obviously too new and didn't know who else should go. So it is by default that I can now get this excited about something with tax in the name. So I'm just going to round up and just share my screen so you can just see a few of these slides. And I'm just going to go through why social investment tax relief is needed, how it works in a very simple way, because it's a little bit of complex and fiddly tax relief. So just do the very easy reference guide. A bit more about how it's been used, and then, yeah, I'm definitely going to get onto the piece about saving SITR and beyond, what happens next. Okay, so why do we need it? It was really interesting, actually. A couple of the previous speakers talked about levelling the playing field, and that's certainly how we see social investment tax relief. So let's just start with the name, because it's not the snappiest title, is it? That's why we end up shortening it to an acronym, SITR or SITR, whichever you prefer. So social investment tax relief is not a tax relief for organisations directly, it's a tax relief for individuals, but it enables social enterprises, I'll talk a bit more about what social enterprises means, to raise investment and to offer their investors a tax relief in return for them making that investment. And the levelling the playing field piece is it was designed to help fill the funding gap for social enterprises and charities. So there have been some long and existing tax reliefs, lots more acronyms coming now, EIS and SEIS, so Enterprise Investment Scheme and Seed Enterprise Investment Scheme, along with some of the others that Chris referred to, which have been available to more mainstream organisations and to some extent could or may be available to social enterprises. But social investment tax relief was designed specifically to level the playing field to allow charities and social enterprises to be able to give investors a tax relief in return for investing what we would refer to as patient and affordable risk-bearing capital. So that's a mouthful, isn't it? So patient essentially means that there's a clause that says if you use social investment tax relief and make an investment as an investor, you cannot have your money back for a minimum of 3 years and 1 day. That's the minimum, it doesn't have to be then, but essentially the capital doesn't get repaid for that 3 years. It takes you a little bit of time then, gives you a bit of leeway to get up and trading and work towards repaying that money. Affordable is that the tax relief often helps to subsidise the return that the investor will take. So I have seen social investment tax relief deals go anywhere between 0.23% right through to sort of the averages for somewhere between 6 and 8%. But for something that is an unsecured form of debt and the lowest, the highest risk, so right at the bottom of the pile if things go wrong, you know, that it is probably still quite affordable if you're talking about 6 to 8%. And that's why we talk about it as being risk bearing. So that's why we need SITR. And the key difference is that it works on both debt and equity, so both loans and shares, because obviously lots of the mainstream tax relief only work on shares, and many social enterprises and charities don't have those to give away in return for investment. So how SITR works, I said social enterprises, that's the sort of catch-all term that's in the government legislation, but currently SITR is only available to registered charities, community interest companies, limited by share or by guarantee, and community benefit societies and accredited social impact contractors. Well, you'd only see those for organisations that are delivering social impact bonds. That's probably not the most common way that you see SITR being used, but it's still important to mention it. So this is how it works. I told you we would do the very simple guide. An individual invests money into a social enterprise by way of shares or debt. The individual then claims 30% tax relief on the amount invested. The social enterprise uses the investment within 2 years to fund trading activity. So this is a tax relief for trading activity. And after 3 years or more, the investment is sold or repaid. Those are the sort of the basics. There are some things that you can do with the tax relief and you can't do with the tax relief. And there are some tricky bits and pieces, for instance, in group structures and things like that. But I did already post in the chat. If you want to know lots more about SITR and some of the detail behind this, we have a dedicated website with lots of great free resources, which have all come from when social enterprises and charities have asked us questions, and then we've developed things from their learning and shared them freely. So let's just talk a little bit about SITR has been used to date. So there's been around £15 million worth of investment raised. It's a really interesting topic, this. You know, lots of people say it's disappointing. We'd like to have had lots more money raised. Well, there's lots of reasons for that behind, but I don't think that any of the 100+ organisations who've raised money using social investment tax relief would say that they feel that it's necessarily been disappointing. I saw that Gina from Plunkett Foundation was on here, so she'll know we've worked together closely. You know, just under half of the deals have involved community shares. And one of the reasons why saving SITR was so important is that community benefit societies really struggling now to use the mainstream equivalents like EIS and SEIS because of an introduced what we call risked capital clause, which essentially means if you're buying a pub or a shop or anything with an asset behind it, really struggling to use those mainstream schemes, which is why having SITR around over this next 2-year period was really important. 53% of the investment via debt. So again, you can't do that with the other tax reliefs. This is the levelling the playing field bit. And 18% of those deals have actually been made in Scotland. So there's been some good use actually of SITR. So I thought I would just go on to one example. This is Port Patrick Harbour. It is community shares. You can see here the cost of capital was 1.5%. And you can also see, I think that the other thing here is great, is their turnover at the time was less than £40,000. The investment was 100,000. So I think it perhaps debunks the myth that raising investment always has to be for large organisations. And taking on board some of the things that Chris said before about, you know, loans, it's interesting that some of the coronavirus business interruption loan schemes and business bounce back loan schemes have actually been accessed by social enterprise and charities. About £28 million were actually in the dedicated CBILS coronavirus business interruption loan schemes. We really need to sort out all these acronyms. There's far too many words. Okay, so that was used to buy the harbour and also to do the redevelopment work, because there'd been no investment right since the 1900s. And the way that they will repay the shareholders is through the income that's generated from the visiting boats. Okay, so I'm just going to round up with saving SITR. Yes, we fought a really long and hard campaign. It feels like, I think, if I'm honest, one of the greatest victories of my career, even though it's only a tiny, very small, but significant win when it was announced in the budget. I nearly fell off my chair. So essentially, the reason it's important is for the next 2 years, social enterprises and charities who want to raise investment using SITR, and particularly those that were already in the process of doing so, will still be able to. So up until April 2023, we still have access to use social investment tax relief. Unfortunately, though, the extension of 2 years is really not long enough. That's really been one of the headlines behind social investment tax relief, the frustration. You know, we've had a rule change 2 years in, and then we had a consultation, and then we had Brexit, and we had an election, then we had the pandemic. So there are lots of things in the tax relief that make it not as good as it could be. We would really like to see it expanded to cover trading in community energy, care homes, and the one that really has impacted on the sector is around licensing and leasing. So, You know, if you're a community hall and you license out your space, or if you are a landlord or you're a sports facility, some of these models, which are very prevalent in our sector, are no longer able to use SITR, and that's a real frustration. So we won the campaign, but not the war. So we got it extended for 2 years, but we didn't manage to get the 5-year extension. But what we are really busy working on now, and I'm really pleased to say, we have very positive signs from Her Majesty's Treasury and HMRC. And what we're all working on now with a range of partners is what will come after SITR. And so we're looking to have a new tax relief in place from April 2023, which hopefully works better than SITR. Some of the problems are it's a bit of a hangover from some of the mainstream taxation. So watch this space. You know, if you are looking to raise investment using social investment tax relief, please do get in touch. There's lots of things that we can do to help and support, whether it's specific questions that you have or just helping you through the advanced assurance process. We have some great editable forms. And then there are many people that we'll be looking to consult with as we work with partners to get a new tax relief in place. That's me.
Thank you very much, Mel. I'm also really interested straight away on what's the kind of thoughts on what's going to come after SITR. Really interesting. And I ask all of our speakers perhaps to come back in and join us for the Q&A. If you've got any questions, do post in the chat. We've got people that really, you know, I think show that they know their stuff around this arena. So it can be a really complex area, I think, for social enterprises and charities. So I'm sure all of our people, even if they can't answer a question today, might be able to point you in the right direction. It can obviously sometimes be incredibly unique to a particular organisation. So, well, we probably can't run a one-to-one tax queries session. People, I think, are genuinely here to try and help you. So, and perhaps just as an opening question, just I think I said this at the beginning a little bit, you know, that balance of obviously we've got lots of social enterprises out there that are very much focused on meeting social and environmental objectives, much of which is where tax money I think is sent towards in terms of supporting communities and the areas we live in. How do you think we get that balance in a social enterprise of kind of, I guess, being a good taxpayer? And I guess it comes down to some degree to that fair, honest and transparent that we heard Graham and Jamie really talk about. So being a fair taxpayer, but also really trying to maximise the money a social enterprise has for meeting social and environmental impacts directly. So what would be the advice you might give to an organisation that's just trying to work out what they're doing, they stand in the middle of that? And I'll perhaps come to Chris first, if I may.
Yeah, thanks, Naomi. It's an important one. As I mentioned, obviously with charities, there's possibly a slightly different perspective on it in terms of maximising the reliefs, and that we do feel that there are some taxes that are paid that perhaps shouldn't be. But I think the main thing is sort of streamlining your systems. and there's obviously more that the government could potentially do to help with that as well, because what you don't want is charities and social enterprises having to spend a lot of time on tax compliance when all they want to do is pay their tax or do it very simply. And I think actually if you look at tax legislation, it is overly complex, and actually simplifying that would actually help. And you know, unfortunately that's where some of the loopholes come into play, and actually keeping it as simple as possible would be really helpful. I mean, from the perspective of sort of charities and social enterprises, I think being involved with, you know, the likes of Social Enterprise Scotland, Big Society Capital and equivalents, you know, if you're in the charity sector, being involved with a charity tax group, charity finance group, it just helps you to sort of look ahead and see what's coming and make sure that you know what your responsibilities are, and that you also maximise the reliefs that are available to you. So I think that's what we always look at, is we like to see, you know, charities have to be responsible, because any and social enterprises too, any attempts to undermine reliefs undermines it for everybody. So it's important that people comply, but also that when there are reliefs available, that they're, you know, people are made aware of them, because the great difficulty with the government's website is that it's a bit of a warren and it can be very difficult to find information. And that's where, you know, coming to some of the stakeholder groups is really helpful, because we try and digest it and share it in accessible formats.
Thank you. Really interesting perspective. Graham or Jamie?
Yeah, just I guess building on what Chris said, fair tax, we aren't against people claiming reliefs. There are very legitimate reasons for tax reliefs. Obviously, just two examples that I've mentioned: topping up staff pension pots or capital investments, for example. For us, I think that paying the right amount of tax is part of an organisational approach that social enterprises can take. And it's this thing of social enterprises doing, as Jamie touched on, so much good in terms of environmental and community and things that matter, that the tax angle just adds to that and rounds out their approach. We had a webinar yesterday, day before yesterday, our opening webinar. We had two FTSE 250 PLCs on there. Obviously, we work with a huge variety of organisations from very small to very large, but both of those were saying, obviously, it's not just the way people see it outside of the organisation, it's the way their staff see it, it's the way they see it in line with all of their other things, their modern slavery, their child labour laws and everything else. It's about a kind of a whole approach, and fair tax fits in with that. It's the way a social enterprise can say to their investors, to their stakeholders, to their customers, clients, it's another way we're doing the right thing. And it's another way we're benefiting everyone by putting back into the system and helping to fund the services that we all rely on.
Yeah, and I'd say one massive key word behind all this is the spirit of the law. Like a lot of accountants and tax advisors and stuff, they will go to the letter of the law, they will find every loophole they can get in order to avoid as much tax and save as much tax as possible. At the end of the day, the laws were written, but there is a spirit behind them laws to say this relief is available for this reason. When you're doing your taxes, if it's a legitimate a way of claiming that relief, that's a good thing. As long as you're being honest and within the spirit of the law, then that to me is how you be fair in tax. You're claiming what you can entitled to claim and what was designed to be entitled to be claimed. You're not paying too much, you're not paying too less, you're just paying the fair amount. And that's the word spirit to me captures all that.
Yeah, I think it's a really interesting. I speak myself as someone that's freelance and having put the appointments with the accountant, and that kind of, if you register as a business, you could do it that way. And I'm like, I'm not here to try and minimise my tax payments. I'm here trying to do this because it's the way I work. And actually, I think it's really interesting that what we saw in the last year, I guess, particularly around the self-employment grants, is that whole debate, particularly around NI and self-employment taxes, and then that link between the furlough scheme and those people who've paid themselves as company directors and members of staff. And that's all been a really interesting debate that's, I think, brought it out on a very individual level, that I think it's definitely something people are more and more aware of, I think, these days. But this is why I think tax is really interesting. I am such a bore. I'm going to just ask if I can come back in on one question, just I guess particularly to you guys at Fair Tax Week, and then I'm going to come back to you, Mel, if I may. It was obviously, we're seeing lots more companies look at things like, I guess, ESG reporting. So they're very much reporting on their environmental and social kind of and governance kind of roles. Should how they approach tax form part of that report, or are you seeing more companies looking to do that, or do you think it's still quite hidden? Perhaps that's Graham or Jamie again.
Jamie, do you want to take
that? In my opinion, I think they kind of go hand in hand. If a company's being fair and honest and open with its taxes and paying the right amount of tax, and it's probably doing other good things as well, like paying obviously the living wage, etc. So I do think they go hand in hand, and I think ESG has gained a lot of publicity and is a big focus on these big PLC corporates and stuff now. And I think, especially with the G7 that's happened recently and all the things around tax at this moment in time, I think tax is being brought into that. So I think soon tax will be one of those things that investors and things look at to see, you know, I'm going to invest into this company, etc. Are they, you know, paying tax? Are they paying the right amount of tax? Are they an honest company? Is something going to come back to bite me in this investment, etc.? So yeah, I think tax is getting a lot more publicity and going in line with ESG. Yeah.
And it's just worth adding as well, we do work with businesses doing this. I mean, for example, Epworth Investment Management, they have in excess 1.2 billion of assets under management, and they are right on with all of the stuff they're doing around tax and around, you know, SRI and ESG. So yeah, and I think there are more and more people coming to that, especially obviously as we touched on the polling that shows that people are they're looking for it and they're wanting to see it. It's not just, you know, kind of a nice optional thing. People are deciding who they maybe potentially also invest with as well as shop or work with. So
yeah, no, it's something that interests us hugely. I mean, we're certainly looking at it from a social enterprise perspective in terms of supply chains and all sorts of ways businesses operate in terms of what customers go in and really look around in terms of who they then buy from. It's becoming more and more transparent. I think social media is really fueling that debate even more. And Mel, if I might come back in on you, and then I'm going to perhaps bring Mel and Chris in on some general points relating to social enterprise. But do you think, are you anticipating in the next few years? I'm thinking we've obviously had announcements from the UK government. We've got programmes up here in terms of Scottish Land Fund that we're anticipating will relaunch in September. Do you see that there's going to be more interest in SITR moving forwards? I think the figure was 18% in Scotland, but I just wonder with that whole kind of community pub kind of the buying of facilities, and I guess Plunkett would know much more about that as well in terms of what's happening on that UK level. Do you think SITR is going to be something that really explodes is probably too big a word, but certainly increases in the next few years?
I'd love to say yes, but I think the answer is probably no, and I'll explain why. Because 2 years is simply not long enough for certainly like new funds to raise. You're much more likely to see organisations that are already well into the process and we're planning to use SITR groups that are well established. You will see organisations who've raised SITR before that go for top-up investment. We've already seen actually HMRC just posted some stats out a couple of weeks ago that shows that in the previous year, the level of investment using SITR decreased slightly. That's hardly a surprise. We didn't even know if it was going to carry on past the 5th of April 2021. So it's not really a surprise. What was quite encouraging though was that the level of advanced assurance applications for people who still were seeking, you know, to use it if it was going to be around was very consistent. And actually you did see significant drops in things like EIS and SEIS, goodness, mouthful, aren't there, these acronyms? So, you know, I think there's definitely hope in there. When you think that, you know, almost 50 community benefit societies have raised investment for community shares using social investment tax relief, I do anticipate that there will be a flurry of activity of certainly towards the end of sort of middle of next year as people seek to make sure that they can get their deals through. But I don't think we will see the explosion because there are too many fiddly and complex bits in SITR that just don't work for us. It's so frustrating, you know, and I see and speak to lots of organisations, community pubs. Here's a really good example for you. So if you have a community pub and you buy it and you're going to operate yourself, you're going to employ the tenant, you can use social investment tax relief. If you're going to employ a tenanted position, then you can't use social investment tax relief because it falls foul of the leasing role. So there are lots of reasons SITR could work better. But I think what was the compelling ask to government, and you know, it is really hard getting through. I think we just made ourselves unignorable in the end, if I'm honest, which is why in a pandemic would you reduce any option for an organisation to raise affordable and patient capital. There was no sense in the levelling up agenda, and bearing in mind that the vast majority of organisations who've used social investment tax relief are not based in London and the South East. So there was no reason to get rid of it with no replacement in place. So I'm really pleased that we managed to do that.
Yeah, it does seem nuts, doesn't it, that you might remove something just at the point where actually you're doing lots of work on, I guess, tax reliefs that might go in the current year. Like I think you touched on obviously business rates, Chris, and some businesses obviously seeing them set at 0% given they're trying to go through economic recovery and rebuild their businesses after a year of change. So no, it's interesting. This is perhaps a question focused particularly for Mel and Chris. You both touched on kind of things that we need to campaign for moving forwards. Obviously SES has a role in terms of working on policy and doing some of that support. What do you think we should be really focusing our energies on in terms of campaigning? I'll go to Mel first because she got a mic off, and then Chris, if that's all right.
Yeah, I mean, I'll probably defer to Chris. I mean, tax is a very wide-ranging subject. Social investment tax relief is an investment tax relief. So I would say that the reason that I think we actually broke through with social investment tax relief was because we did it in partnership. So we worked with Plunkett, we worked with Co-ops UK, we worked with Social Enterprise UK, we worked with the two most significant fund managers who've got capital out there. So with Social Investment Scotland and also with Resonance. We worked really hard to reach as many places, and I think that it just shows what the power of partnership is. So I think all infrastructure organisations, including Social Enterprise Scotland, should be looking at how can they work with the leading bodies like the Charity Tax Route, the Fair Tax Foundation, and ourselves, so that we have a cohesive argument. I'd love social investment tax relief or any tax relief where there is a mainstream equivalent. My question as somebody who is a champion for the social sector is we need them to work equally as well for social enterprise and charities. In fact, I think there's an argument to say that they should work better. So that's definitely going to be our messaging, but I'll defer to Chris for sort of the wider piece.
Thanks, Mel. Chris?
Yeah, thank you both. I think, unfortunately, there's going to have to be a bit of a rearguard action as well. I mean, we're always looking to be proactive and to try and increase reliefs, but a bit like with the SITR, the danger with some of these reliefs is that the government will look at it and think, well, has it been used very well? What's the take up? Are people interested in this? This takes us a lot of time, to administer. It's costly. So I think one of the things we need to do is demonstrate the value of the reliefs that we've got and the system that we've got. I mean, Brexit and COVID have dominated the policy sphere for such a long time. And we know that COVID is going to have to be paid for somewhere down the line. And, the Treasury Committee have looked at this and other bodies too. And it's important that, the social sector, the charity sector, social enterprise sector are not just sort of left out of those discussions, because it's all too easy for the money to be allocated, in other sectors, perhaps those with bigger voices and bigger armies of PR consultants and lobbyists. So it's important that we demonstrate our value. I think it's being mindful of what the government's interested in as well. So levelling up is the big sort of buzzword at the moment. And how do we tie in the work that charities and social enterprises are doing with that, so we're at least on the same trajectory as the government? And I think with all things, it's sort of data driven as well. The more we can evidence the benefits of reliefs and support for our sector, the better, because otherwise, as I say, they may well just say, is this the best way of spending government money, whether it's grants or tax reliefs? So I think, being conscious of what the government's interested in and then really being able to demonstrate value.
Thank you, Chris. That's helpful. This perhaps leads in, and it's a slightly different take, perhaps again bringing Graham and Jamie back in, but should we, given the social enterprise sector, I guess, is very focused on social and environment, I think what we often hear when people start talking about tax is everyone's frightened to put up tax, or they're always campaigning for tax reductions. Is there actually something that as a sector we should be strengthening a campaign that actually this is all around better ways of looking at tax rather than always simply focusing in on what seems to be a very often media-driven campaign that always seems to focus on tax reductions or a fear of tax rises?
I think just going back to the kind of overall point that, you know, corporation tax is sometimes presented as a burden. But again, when you think about everything that it helps fund, it really isn't. And as Jamie kind of pointed out at the end, certainly for social enterprises, it's a metric that you're completing your mission and kind of giving back to society in line with your ethics as a business. So I think there maybe needs to be a shift in helping the public understand just what corporation tax helps fund and how we all really rely on it. I know obviously not all corporation tax funds every public service, but there is a vast amount of good that it does. And I think changing the narrative to focus on that good rather than, as you say, the fear around maybe tax rises or other things, that's where I think we'll start to see the public really further get behind tax and the things it pays for. Although obviously, again, going back to our polling results, as we see, people do have some understanding of it. But I think there's certainly something there around demystifying the area of tax, and certainly when it applies to businesses, and presenting it in a more positive light.
Thank you, Graham. That's helpful. Now I'm going to ask perhaps one more question and then just get everyone just to do a general reflection, because I'm conscious we're kind of coming to our kind of 12:30. Everyone who's used to coming every week knows we tend to overrun by a couple of minutes, but I do try not to do too much of that. It's a very specific question, probably, I guess, predominantly probably for you, Chris, but obviously we talk quite a lot about charities, and obviously not every social enterprise is registered as a charity. So should the same rules exist for community interest companies as charities, or do you think again it's a much more complex area than that? I'm just conscious that I guess it's do community interest companies also need to be kind of brought into the agenda a little bit more, or do you think they are?
Yeah, I think it's a tricky one, because already you have a sort of a charity sector that is so diverse and so huge that actually having one system to fit everything isn't necessarily easy. I mean, I work on one hand with Cancer Research UK and the Wellcome Trust, and on the other hand, local village halls and churches. So already there are tensions within those sort of groups, because for very large organisations they have very complex tax needs, but for very small organisations it's often not very complex, but it is actually very important, some of the tax reliefs or just removing some of those administrative burdens. So I think there's possibly an argument for it. I mean, a lot of the charity reliefs are vested in the idea of it not being profitable, and that certainly comes down to some of the sort of corporation tax reliefs. So I think if what social enterprises or other organisations are trying to do is to generate that profit and then reinvest it into their communities, whatever form that takes, I think there's possibly an argument for sort of having more social enterprise specific reliefs that are out there, not just for the investors, but also for the organisations too. And I think with, the concept of charity is a very old one. I mean, the concept of social enterprise, while it may have been there in one form or another, is a lot more modern. So it may well be that there just needs to be some blue sky thinking, for want of that horrible term, to actually think, rather than just trying to piggyback on necessarily what charities have. If you had a clean slate, what would the best tax framework look like for social enterprises and bodies within that world? So I think it would be, it's definitely something to consider, or to look selectively. Things like business rates relief, for example. I think that might be the softest target potentially, although as I said in my presentation, there are other sort of discretionary reliefs that are out there. But again, now tax reliefs talk about charities and casks, whereas casks weren't really around before. So there's always the argument for it. It's just then also making sure about the regulation, I suppose, as well. That's where charities do tend to have more formal regulatory structures, and that might be something that would also have to be considered.
Thank you. And I know certainly a lot of our members aren't always registered charities, and we always get asked those distinctions, I guess, particularly with the community interest companies. So thank you for your perspective there. It is 12:30, so I always like to kind of leave the last kind of closing remarks as something quite open for all of our panelists in terms of, you know, the key thing that you wanted to just get across from today's webinar to our attendees and to those that watch back on the video. So what's the one strong key message that you would like to get out? And I'll go along my screen and I'll go to Mel, then Chris, then Graham and Jamie.
Okay, well, I thought I'd just share this one with you because I think this might make people smile. So I do remember before I worked for Big Society Capital, so my last role, I remember having an organisation ring me up and saying, I'm thinking of starting a social enterprise, what's the most tax efficient governance structure? And I actually said to that, I thought they were in the wrong business. So, you know, I think this piece about the spirit of the law, I absolutely concur with that. And that applies to investment as well. So we'll always continue to campaign for tax reliefs that work better, particularly tax reliefs that allow individual investors who care about social change, whether that's environmental or social, to have a route to be able to invest into social enterprises or charities, but always within the spirit of the law.
Thank you, Mel. Chris?
Thanks, Naomi. I think the takeaway point I give to everybody is to just inform yourself as to what's out there. I think people on this call and viewing the recording are already taking the right steps in that direction, and it's looking to stakeholder bodies out there that have that information, not necessarily being afraid of taking advice as well, because I think we've all agreed it's very important that charities and social enterprises pay their tax where it is due, but then also don't get mired in sort of administrative complexities and things as well. They want to make sure they free up the time to be able to do the good work that they're there to do. And if tax reliefs and other things help along the way, then all the better. But certainly, I think back to Melanie's point as well earlier about working collaboratively, sharing from other people and their experiences is also, you know, something I'd recommend everybody tries to do.
Thank you very much, Chris. Graham, just a final reflection.
I think just the value, certainly for social enterprises, and being able to show unequivocally that you're doing the right thing as a social enterprise. And obviously the public, it's something they're looking for. It's something that's been, as you've seen, everywhere all over the news in the last couple of weeks. And really just all the great work the social enterprise is doing, just bolstering that by being able to say, we also do this. And it's part of one of the many great things we do, whether that's environmentally or from a community perspective. But just kind of rounding out your status as a social enterprise by being able to show that on tax, you do the right thing and it's done with pride. I think that's a really key thing that people are looking for.
Thank you, Graham. Jamie, just a final thought.
I just think, you know, getting a bit spiritual, right? But I just think we're all in it together, and we just need to be more honest, more fair, more transparent, and give back. And so, you know, if your focus is to do the right thing, pay your way, and help out, then you should have no problem, you know, in becoming Fair Tax Mark certified. And that, again, that just goes hand in hand with the ethos behind charities and social enterprises.
Thank you, Jamie. I was just looking as everyone was doing their closing remarks, I was trying to find the kind of quote from Elvis and Cress, who pretty much have been talking about holding a tax party in terms of celebrating paying tax rather than thinking it was, oh God, we're paying our tax day. So I guess the key thing for me is we should be celebrating that we're contributing towards doing good and changing the whole narrative of tax is bad to tax can be good. Let's make it good. And I think that was perhaps some of the closing stuff I just wanted to finish with today. So I just wanted to thank all of our speakers today. I think tax is fascinating. It has so much power to do the right things when it's put in the right way, and we shouldn't be frightened to have those conversations and to be really putting out that narrative that tax is good rather than tax is bad, and all saying that a little bit more, I think. So thank you very much to Mel, Chris, Graham and Jamie. I hope the rest of your week, if you've got other activities for Fair Tax Week, goes well. And really looking forward to, I guess, working and supporting some of those campaigns around the future SITR. And I'm now also feeling I'm really tuned into thinking what should we be doing on irrecoverable VAT as a campaign as well. So really interesting. Thank you everyone for today. Have a brilliant day, everyone. Thank you.
Thank you.
Thank you. Bye.